Hi guys, hi from Andrea Unger. I'm back home, you can see. I've been to Malaysia, Kuala Lumpur, and this was my third IFTA annual congress. Third year where I came back with the confirmation about the direction of technical analysis. What I got from this conference, which by the way was really well organized, congratulations friends from Malaysia, Mata Malaysia organized it, I saw presentations again about studies of the markets. And these studies were normally presented with numbers. Numbers are there to confirm the hypothesis we are basing our studies on and to be able to evaluate them. In the past, we were accustomed to reading about theories. Theories with some numbers, but not the final numbers we are interested in. How much can be made using this approach? Or does it really work and to what extent? In the past, we were used to deal with head and shoulders, support resistance, wedges, any kind of setups, which was fine and certainly helped enormously to learn how to trade the markets and to understand the charts. But now, whatever is presented comes with numbers, which means if I see this, I try this, I got the pass because you're testing this. So from this presentation, we can, from the last part, get immediately an answer about the question, does it work? And also, how does it work in terms of numbers? Numbers, this is money, but actually we measure in money the results. This is very useful because doing so, we can immediately get how the results look like. Of course, if they're positive or not, if they're negative, we don't care. But if they're positive, are they positive the right way? Could I use that? Would I feel comfortable in using this? Or maybe the type of distribution of results is not something I could cope with? All things like that. In these 3 years of conferences, I saw a lot of interesting presentations where numbers were produced. This is so important. I mean, the classical chartist approach has been mostly substituted by a quantitative approach. And this is so important because it is clearly driving in the direction I've been living in for the last I don't say how much, or I would feel old, years. I've been trading, and I'm trading with trading systems. I've always said that trading systems help me to understand what I'm doing and to measure what I'm doing. I'm not saying that automated trading is the only way to make it possible. I mean, to make trading for a living possible. Absolutely not, that would be false. But it is clearly a helpful way to do it because you can always measure what you are doing. This is something I've always said, and obviously it is helping in making decisions based on numbers and not on feelings, which is another thing that helps because it sort of cuts emotions out. Emotions will still be there clearly, but if you test, you measure, and then you follow up, you have a clear set of numbers to base your decisions on, and not only on your personal feeling in the moment. And also entries and exits are based on specific setups, again measured by numbers and not by lines on a chart. Lines can be fine, everything that is on the chart approach is absolutely fine, but of course quantitative analysis helps enormously in making the best decisions for you, for your own psychology and your way of trading. IFTA again showed me with high value presentation, this is the direction the analytic world is going. I found people who I never thought could make it. I mean, not because I thought they were stupid or limited, but just because They were identified by indicators on charts, and now they are showing numbers and analysis. So I'm not telling you the name because that could be misleading to some extent, because I always have a great consideration of them, but maybe somebody thinks, he was thinking they were not good, and now that they deal with numbers, they are. No, absolutely not. I just say that I know now that these people have always been dealing with numbers. I just saw a part of what we are really doing. So guys, if you want to do something in trading, you can do it through the systematic way, because this helps in making decisions. Not because it's the only way. Somebody presented it like that. I don't think so. I always said discretionary trading can be fine, but I do it systematic just because I feel more comfortable, and I think it's easier to put on brick by brick all your kingdom, let's say, of trading. That's it, guys. See you next time with some maybe more technical content. Ciao from Andrea Unger. Enjoyed it? Click the link below and you will be noticed as soon as new material is available.